not sure that tariffs are that relevant because there will be so many exceptions and adjustments. The market since summer of last year to the peak in December, January, depending for the peak is for each stock different. The market was actually weakening and fewer stocks were making new highs. And in January, the high was just among, say, the magnificent 7 stocks and so forth. And these stocks became grossly overvalued. But the investment community, of course, will never tell its clients that something is overvalued because they are paid by the assets they manage and by the performance. So they kept on telling their clients that the stock market will go up and so forth, not realizing that we were in the biggest asset bubble we've ever been in history at the end of last year and early this year. And the market started to weaken, the tariffs were then declared, and the investment community, the fund managers, most of them the dumbest people on earth, of course they use the tariffs to tell their clients, oh, the market is going down because of the tariffs, when in fact they made the mistake to tell their clients to buy right at the peak of the market. The market was so overvalued by any standard. And some people actually pointed this out, from David Rosenberg to John Hussman and so forth. They had statistically shown that the market was more overvalued than even in year 2000, from where the Nasdaq dropped 70%. But no, they kept on telling their clients, buy Tesla and buy Nvidia. And Tesla, within, 2 months, is down more than 50% and Nvidia 42%. These were the 2 most popular stocks among American investors and globally. I know people all over the world who were trading in and out of Nvidia and in options, and they were long leveraged funds. So the market is now oversold, but the leveraged funds still have to sell because their clients get margin calls. I have maintained since last August that if the statistics were properly analyzed, we would be in recession already. But a recession is when your standard of living is going down. Now, for the rich people, as long as the stock market went up, and as long as property prices rose, their standard of living wasn't going down. And for the recipient of money that the government was printing through its central banks, the standard of living was not going down. But for ordinary people who go shopping in the supermarket and buy food and have a salary, they are workers, they get a salary increase of say 4% per annum, but the cost of living is going up 8% per annum. You think the standards of living are going up? No, it's going down. They're all in recession. 70% of America is in recession already. But the economists on Wall Street will never tell you this because they want the market to go up, so their fees go up. I'm a financial man. I know our industry is a fraud. Nobody criticizes the Fed for their money printing. Why? Most families are struggling, but a few people are doing very well, including myself, because of the money printing. But nobody will go and say the Fed is a fraudulent organization. I have maintained for the last 35 years or 40 years, anyone who doesn't own any precious metals is a man who trusts the central bankers. Why would anyone trust all his money to the central bankers? And some people will say, I can't have that much gold because most of my wealth is in my house, and the asset allocation into gold cannot be much more than, say, 10%. But wealthy people who have, say, $1 billion and don't own a single gold share or a single ounce of gold, in my opinion, they are dumb. They trust people like Yellen, Bernanke, and Jerome Powell. How could anyone trust his wealth? These people, that I will never understand. And it's like Bitcoins. You cannot increase the supply of Bitcoins and gold and silver and platinum and any commodity as much as you can print money. So per unit of money, the price will be stable. The money will depreciate. It's not that gold is going up, but the value of the purchasing power of the dollar is going down. And the government officials in America, the Bureau of Labor Statistics that calculates inflation, is another fraudulent organization, because they say, oh, the inflation is 1%, 2%, or 7%. When in fact, we have statistics that show how much the cost of living has gone up for ordinary people over the last 10, 20 years.
Mark,
Look at shadow statistics. Yeah. They show at the present time an inflation rate of around 10% per annum. I think it's a bit lower, but nonetheless, the cost of living for ordinary people is going up much more than what the government is showing. The National Bank in Switzerland, they say that the inflation is practically non-existent. That's why interest rates are at less than 0.5%. But how come in all the surveys, international surveys, Swiss cities are among the 5 most expensive cities in the world? But they claim they have no inflation. In the Trump administration, you have a collection of very wealthy people. Do you think they like it when their wealth suddenly is cut in half? No. They're going to put pressure on the Fed to slash rates and to print money. In my opinion, in today's economic conditions, the wealth effect is very powerful, much more than before. And this wealth effect will plunge the economy into a depression. They must print money. It's my impression that under Trump, the deficit will go up, and that under Trump, money will be printed like never before. The market went down because it was grossly overvalued. The tariffs are not that significant. Only a stupid person with no economic knowledge would introduce these tariffs. They're inconsistent and they are negative for the global economy, let's put it this way. But I suspect the market is selling off because the US will soon attack Iran in combination with Israel. The market is a discounting mechanism. It's going down because it is looking forward. The other reason it's going down, I think the earnings will by and large be very disappointing, because through the tariffs, the costs will go up and the companies may not be able to roll over the tax to the consumer, because the consumer is stretched already. He doesn't have the money. Listen to the conference calls of Dollar General, of Walmart, of all these shops that sell to every American. People are struggling. The upper middle class, they don't have that much money. Strictly on valuations, if I compare, say, how much does a typical worker have to work to buy an ounce of gold? How gold, is it cheap compared to silver? Is it cheap compared to platinum? No. Is it cheap compared to wheat, soybean, corn? No. So purely on economics, gold is not cheap. But compared to the entire financial system, I don't think there are many investors that have more than 1% in gold. They go to cocktail parties, then the wives, of course, they go run around and smile and say, yeah, we have gold because gold went up. And then you ask, well, how much gold do you have? They say, we have a few ounces, and, but it's meaningless in comparison to their wealth that may be $500 million or $1 billion. People are grossly underweight gold. Central banks are underweight gold, especially the U.S. Treasury. They may not have any gold. Who knows? They don't want to audit it because they don't want to tell you the truth. So all I'm saying is, we were in an asset inflationary environment, 1980 to 82. It began with stocks bottoming out in 82 and bonds reaching high in yields in 1981, when treasuries were yielding more than 15% on the 10 years. After that, we are in asset inflation. Everything went up, collectibles, stocks, bonds, and so forth. It came to an end in 2020 for bonds, and for stocks between 2021 and today. 2021 was the peak of the meme stocks, of the SPACs. Actually, I'm surprised that the market is as high as it is because so many stocks have collapsed already by 90%. There's something wrong with the financial system. It's not sustainable in the long run. There's something wrong with the political system. It's not sustainable in the long run that countries run these fiscal deficits and they borrow money at artificially low interest rates and they think that eventually nobody will suffer. My view is that the global economy was this size, say, in 1970. It's now, say, this size. But the financial system was this size in 1970. The stock market as a percent of the economy was this. And now it is a huge bubble. And this huge bubble has boosted asset prices. And in my view, this huge bubble will have to be deflated sooner or later. That is my concern. And can you do it without pain? No! But the governments will try to make it without pain by printing money. I've observed several bull markets in the stocks and in the commodities and so forth. What is unusual in the current case is that stocks, gold miners, have performed poorly compared to the physical. And I've been thinking about this. Why? I think that there are lots of people in this world who are very wealthy, billionaires, and the central banks, they know that something is missing in the financial system. They can see that the leverage and the derivatives and everything, something is wrong. They say to themselves, okay, I'm fortunate, I'm a hedge fund manager, I've earned $1 billion in my life. I never thought I would be this rich when I was studying or not studying. And so they say, okay, I want to own something that keeps its value and is not paper money. So they can see that gold shares are cheap relative to gold, but they want to have something physical and not financial. So they own a ton of gold or a ton of platinum or silver and so on. And the central banks around the world, they have as a percentage of their assets, gold has gone down until recently. And in the last 5 years, gold has started to move up. In other words, they are buying physical. And part of the reason to buy physical are the idiotic economic policies of the US to punish other nations and seize their assets. Why would anyone have an asset in America if the American government can arbitrarily seize it and take it away from you? I want to point out to these American politicians and the State Department, they are crazy to think that the world will ever trust them again after seizing assets. I think, of course, after 40 years of asset inflation, stocks going up, properties going up, bonds going up until 2020, collectibles going up, stamps going up, and so forth. The world is conditioned to play the money game by appreciation. They are conditioned that something will go up. But I'm telling you that investors should think not to make money, but how to lose less than your neighbor. Because if you lose 20% of your assets and everybody else in the world loses 50%, you are the king relative to everybody else. You understand? Everything goes down 50% and you only go down 20%. You're much richer than if everybody goes up 100% and you only go up 50%. So I think people should consider the possibility of having a broad asset deflation, which has a negative, what you said, a reverse wealth impact. And then consider what is the investment that is the best, that will go down the least. This is my view.